Hi, I'm Larry Cheng, co-founder and managing partner of Volition Capital, and I am thrilled to be here with you today for the inaugural episode of Volition Flash Feedback, where we will be looking at real pitch decks from real companies and taking you behind the scenes and helping you understand how an investor is processing the pitch deck as they review it. So in each episode, what we will do is we will take one pitch deck and review it very quickly, and it's going to be quick by design because an investor in a first pass-through, first blush review will go very quickly, and I'm going to provide you some real-time perspectives as we walk through it. And then at the conclusion of each episode, we will elevate 2 or 3 key take-home points, key learnings that will hopefully be helpful for you as you think about how to position and present your own business. I am particularly excited today because the first pitch deck that we're going to review is the pitch deck from Chewy in August 2013. If you know the Chewy story, they have become the dominant pet food e-commerce company in this country. They are publicly traded, worth north of $30 billion. And we were fortunate enough to be the first investor, and I was on the board of the company. And so it's really fun for me to look back at the pitch deck and understand how they positioned themselves. Now, it would be very easy to say, hey, Chewy was a world-class success, so presumably their pitch deck and story must have been world-class as well. But I don't know that that's fair. If you listen to Ryan Cohen, the co-founder of Chewy, tell the story, over 100 investors passed on Chewy when he was trying to raise the first round of capital. Even though we were the fortunate one to invest, I think by definition, if 100 out of 101 investors pass on your opening pitch in your first round of capital, I think there's things that could have been improved about that pitch deck. So we're going to look at the Chewy pitch deck with a critical eye, even though it was a runaway success, and see what we can learn to help you think about your own business. Now, before we dive in, I just want to note, we don't always want to review pitch decks from our portfolio companies. So if you want to submit your pitch deck for consideration, you can go to volitioncapital.com to our Flash Feedback page and submit your pitch deck. And secondly, if you want to see other episodes of Flash Feedback, please subscribe to this YouTube channel. Without further ado, let's dive into the Chewy executive summary and pitch deck from August 2013. So here it is, the Chewy pitch deck from 2013. Opening slide, opening table of contents. And by the way, we're going to skip the summary financial information, but we'll run through everything else. So let's start with the overview. Here it is, 8-point slide, investment highlights. Key takeaways, I guess, it's recurring model, high touch service, big market, strong growth. I'll tell you this, I kind of don't love 8-point slides. I think it's better for a slide to have a single clear point. So these types of 8-point slides become hard to present, but I understand they're trying to lay it all out on one opening slide. If you look at the next page, I would see here strong month-over-month growth, probably 60-70 million run rate business if you look at their July 2013 revenue number. I see a sense of scale, 175,000 customers, stable AOVs, and strong net promoter scores. So overall, you look at this overview and I say, okay, there's a few key things that you like, scale, growth, customer satisfaction. I'm intrigued. Let's learn more. Here's a classic 4-chart in a single slide format. I don't always love this structure, but I think it makes a strong case in this example. You see strong growth in the customer file. You see strong growth in repeat orders, which always gives an investor a sense of stability in the business. You see stable to declining acquisition costs as their marketing spend has scaled. And you see strength in the variable contribution margin increasing. So, high level points a customer looks for is consistent growth, improving economics. And I think in this slide, you're seeing both of those. Now the deck transitions to market size, where it emphasizes this is a broad mass market and the addressable market is $33 billion. It's somewhat ironic because the company, Chewy, trades at almost a $33 billion market cap today. So it's ironic that their market cap is the same value as the addressable market in their original pitch deck, which is a little bit unusual. You'll see in the bottom right here, it talks about premium pet food being the fastest growing segment. I think this could have been elevated. Actually, the migration towards premium pet food is a key driver of the entire unit economics of the business. And I think it got a little bit muted from this slide. So Chewy exists today, and Chewy's success exists because the premium pet food market grew, which means the average order value grew over time. Next slide, this covers the growth of different channels for pet food. So up top, you see independents, mass retailers, pet specialty, grocery, all sort of in this moderate growth land, 4 or 5%. but e-commerce is growing at 25%, as you see from the bottom. So Chewy is positioning itself as, hey, strong growth, leader in the category, and it's the fastest growing channel in the entire market, which is a large market. So I think it's making a good overall statement so far. Next, Chewy is comparing itself to competitors. I think this is a very fair slide. This covers both pure play competitors in e-commerce and bricks and mortar retailers. However, I remember looking at this slide 8 years ago, and my reaction was somewhat muted. Why? Because Chewy compared itself to Wag, Petflow, and Pet Food Direct, and Chewy is somewhat the similar size and scale of each of those companies. Roughly 50, 60 million of revenue, roughly a couple 100,000 visitors per month, roughly 10, 15,000 SKUs. So there was not separation from this slide and their competitors, and let alone the fact that Wag is owned by Amazon at this time. So this was a little bit of a mixed point, a cause of concern. And then you see the size and scale of the bricks and mortar retailers beneath. And that can be a positive or negative point. On the positive side, you could say, well, Chewy can steal share from a $6 billion revenue PetSmart. Or you could say that Chewy has insignificant scale in the market, and so very little negotiating power. So overall, I thought this was a very fair slide, but perhaps not a slide that wins over an investor because the competition was very real at that time. Next, this is a slide that tells you about the management team, but this is one that demonstrates that you cannot judge a book by its cover. So my first reaction to this was, the team is not fully baked out. You have five roles at the bottom with no names attached. So I presume that those were hires that needed to be made. And you see in Ryan, Michael, and Alan's backgrounds, there's no company names, there's no formal titles. It felt like a young, raw team. And however, and in some respects, that kind of was the case at the time. However, this team became world-class executors in e-commerce, just truly world-class. They deserve all the credit in the world for building Chewy into what it is today. But this slide may not have painted that picture. So it's an interesting dynamic of how you present your teams. But I think as an investor, we have to appreciate that not all successful management teams come from the same cookie cutter background, and these guys became world-class over time. All right, marketing. This is the first marketing slide. I honestly have no idea what it's saying. It's too dense. There's 12 bullet points on this slide. I don't even know where to go. So I think this is a loss, this slide. If I try to dig in, it's talking about AOVs, which they already covered in the overview slide. It's talking about Net Promoter Score, which they already covered in the overview slide. So I think this is a bit of a confusing way to start the marketing section. Next, again, a questionable slide. They're trying to show that the website is easy to navigate, which it was and is. However, they're compartmentalizing the website and they're presenting it in such a messy way that it's a confusing way to make the point that the website is simple. And so I actually don't think it makes that point. So not the most helpful slide overall. This is where we start to get into the strength of the Chewy story. They're showing the auto ship numbers. This is kind of like Amazon Subscribe and Save. And at the time that this was happening, this model of auto replenishment was new. And it gives an investor a sense of confidence that there's just this strong secular growth of subscription customers over time. It makes you feel like the customer base is stable. Today, Chewy as a public company continues to actually present this number, which is obviously now tens of millions of customers into this auto ship program. Again, a slide that I'm not sure what the core point is. They're showing that they have a lot of customer reviews. They're showing a mix of 5-star and 3-star reviews. I mean, Chewy is an e-commerce company, so it's not the brand that's getting reviewed. So I'm not sure whether this was a useful piece of real estate in this overall pitch deck. But nonetheless, they decided to present customer reviews and the scale of it. Once again, diving into retention and reorder frequency. This is also a bit of an opaque slide. They're using Trustpilot and reseller ratings, which I know as third parties have varying amounts of data per retailer or vendor. So it's unclear if this is apples to apples sort of scale of reviews. Also, it's sort of unclear what each rating means. And so again, I think they're trying to dive deeper on retention and reorder, but this wasn't the strongest way to show it. I do think the strongest way to show it is in the next slide. So if there's one slide I'd point to, which is why we invested, this is it. This is the revenue cohort slide, which, as you see over time, the width of the slide, the width of each layer is the amount of revenue, equates to the amount of revenue the customers acquired in that month spend over time. If you look at the x-axis, it's over years, so this is a real sample. And if you look at the far right, it looks like a layered cake. So that means that the customers coming in year 1 are spending very similar amounts in year 2, 3, 4, and 5. This is the strength of Chewy. Tremendous revenue retention and stability for many, many years. I'll come back to this, but one of my core points for this slide deck is this should have been elevated. This is presented rather matter-of-factly as sticky relationships drive enhanced customer lifetime value. But what this really is absolutely elite revenue retention. It's Amazon Prime level revenue retention. I've met with hundreds, if not thousands, of e-commerce companies over time. I rarely, if ever, have seen this level of retention. This is why Chewy is so successful today. It's why Chewy was able to make so many investments that were sort of counter to the industry. It's because they knew once they got their customers, they'd keep them forever. And so this particular slide, this chart, needed to be amplified in the overall deck. Merchandising, again, a 6-point slide. I'm not sure any of the points are particularly that compelling. They're just talking about having 12,000 SKUs, which we already know from the competitive slide is not that differentiated. So again, not the strongest slide. I would have passed over it. This is an interesting data point about the revenue concentration by SKU and by brand. I think it's a good data point to have. Investors are going to ask, and it does show some concentration at this stage. So, top 10 brands representing 50% of sales. It's not true, like, strong diversification overall. So it's the right slide to have, but not the most compelling take-home point. Lastly, in operations, they talk a little bit about their third-party logistics provider, who they eventually transitioned away from to ultimately in-source logistics, which was key. A proverbial slide on scalable technology platform, which I'm not sure really makes the point. It's just a picture of the website. The technology platform did scale to hundreds billions of revenue and sort of tens of millions of customers. But this slide sort of doesn't capture that scalability. And then lastly, the deck ends with summary financial information, which we will not cover. So there you have it. That's the Chewy executive summary and pitch deck from 2013. Now let's rewind to the core question that we asked at the beginning, which is why, when Chewy became one of the most successful e-commerce companies of all time, why, when it became worth over $30 billion, did theoretically 100 out of 101 investors pass at this pitch deck, pass at this story at this time? What could the pitch deck have done better? I have 3 very quick thoughts for you. Number 1, I mentioned it earlier, take the best metric, the most important metric of your business, and elevate it and amplify it in your story. For Chewy's case, it was the cohort revenue retention chart, which showed that the lifetime of a customer just kept going on. And that became a huge strength of the business. First of all, it was presented as kind of another metric in the deck. But that metric, that chart is world-class. It's absolutely elite, and it should have been elevated and positioned in that way. Secondly, it should have been presented as a strategic lever for the business, which it was. That revenue and retention enabled Chewy to make very unique investments in customer service, very contrarian investments in fulfillment, and enabled Chewy to be very aggressive on customer acquisition, because all we knew is that if we acquired the customer and we made them happy, we would keep them forever. And so we were able to do certain things with the business that other businesses which didn't have our retention weren't able to do. So it was a huge advantage. It was a huge asset. It's a world-class metric that should have been elevated. Secondly, I think you need to anticipate why investors are going to pass. And if there's one common reason, you need to address that reason head on. So I think a lot of investors who passed on Chewy in 2013 passed because they had the analogy of Pets.com in their head. Pets.com was the first pet food e-commerce company in 2000. That was kind of the .com bust. It was the height of the .com bubble. It was a very notable bust. And everyone just thought, how can you ship 50-pound bags of dog food online? And it was a ridiculous notion, and further solidified that reputation given Pets.com's failure. So I think Chewy should have had a slide or a section that said, do you think this is Pets.com 2.0? Let me tell you why it's not. Well, let me tell you why that analogy is wrong. They could have said things like this. In 2000, everyone was on dial-up internet access. In 2013, everyone's on broadband. So that's a huge sort of fundamental infrastructure shift. In 2000, there's probably a couple million e-commerce customers. In 2013, there's a couple 100 million e-commerce customers. So the market is completely different. In 2000, there's probably a couple categories moving to e-commerce, books, music, and so forth. In 2013, every single consumer product category in the world is moving to e-commerce. So you have these huge changes in the context which when these companies started that investors just didn't separate and didn't make clear because Chewy should have made it clearer. And I would say most importantly, within the vertical in 2000, there was not a premium pet food market. So a 25 or 15 pound bag of dog food is going to cost $20. In 2013, the premium pet food market had scaled as the fastest growing segment in the market. And so that 25 or 15 pound bag of dog food now costs $50, $60, $70, which changes the entire unit economics of the purchase. So I think Chewy should have hit that question or hit that issue head on and just laid out why pets.com is the wrong analogy, get it out of investors' heads, and enable them to see the very strong performance at Chewy for what it was. So that's the second point. And thirdly, I don't think this pitch deck did a good enough job articulating value proposition. Why should consumers go buy online? Why should they buy from Chewy? That was never fully addressed. But I did this during our diligence. I went into a Petco and PetSmart, and I literally comparison shopped the same products in those two stores with Chewy. When what I learned was literally, and I'm not even exaggerating, the very same product in Petco and PetSmart was 20, 30, 40% more expensive than on Chewy. And so what is the consumer expected to go through the hassle of driving to a store, finding parking, hoping that their product is in stock, for the privilege of paying 20, 30, 40% higher pricing, and then have to lug it back home and bring it into their home. When you can just order it at Chewy, pay a much lower price, and it shows up a day or two later. That's a no-brainer value proposition. That is fundamentally why all these customers shifted to Chewy from the traditional retailers. But strangely enough, Chewy did not emphasize that value proposition in this pitch deck, which is why they have millions and millions of customers today. So to review the three most important takeaways from the Chewy pitch deck, number one is emphasize and amplify your strongest metric. Number two, anticipate why investors may pass and address those issues head on. And number three, clearly articulate a very compelling no-brainer value proposition. And that should make your pitch deck stronger. So that's the review and the flash feedback on Chewy's pitch deck in 2013. If you would like to hear other episodes and watch other episodes of Flash Feedback, please subscribe to this YouTube channel. And importantly, if you would like to submit your pitch deck for possible inclusion into this channel, perhaps I'll have the chance to review it just like this. Go to volitioncapital.com and submit it through our Flash Feedback page. Thanks so much for tuning in, and we'll see you next time.